Yo, 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 how's everyone doing today? Welcome to Towards the Storm. My name's Thomas Gaffney. I'm your host, and this is where we talk about business, Bitcoin, and bullshit. Today, I have with me a wonderful guest. His name is Ibrahim Mahmoud, but he goes by Beem, and he is one of the co-founders, I believe, of Radlock, which is a project on the Radix DLT network. And we're here to learn a lot about him and really excited about your project. Beem, tell us a little bit about yourself, man.
Yeah, cool. Nice introduction there. So I guess on my side, I'm by trade a full stack developer, so I'm very much a software developer and have been in financial services for about 5 years or so.
Sure.
And in the meantime, I'm currently working, as you said, on Radlock. Yeah.
That's super cool. So Radlock, right? We'll get to that in just a little bit, but let's see, who is Beem? You know, like what got you into crypto? What got you into building this project? Like who are you, man? Like what's your MO? You stay out of bed in the morning.
Yeah, that's a very good question. So I guess on my side, how I would describe myself is, for the most part, purely an engineer, a developer of all sorts. And for the most part as well, I'm quite a curious person. I like dabbling into very different technologies. I like learning new programming languages, for example. I like learning a lot of, different conventions of programming. And that's sort of where I kind of dove into the crypto world, right?
Cool.
And at the same time, I don't want to be too jaded by the technology. I want to actually understand what are the use cases here and, see what crypto is about, what problems they actually solve, and how that can be leveraged in the real world, right?
Mm-hmm.
As all technologies that I evaluate. Well, I moved into crypto-ish, starting to learn more and more about different technologies across different chains. And well, I stayed at Radix after finding it.
Yeah, that's cool. And so how did you find Radix? Did you stumble upon it or?
So that's quite a funny story, and I'll give my most honest take on it.
Okay.
Actually, I found it on CoinGecko, and I was like, so far, every layer one project has mooned like through the roof, and I just want to be early to some layer one, right? And
Absolutely.
so I found Radix.
Yeah.
And yeah, so from there, I did some research into it. I was like, these guys, the team seems very competent, very transparent, especially with the monthly videos they post and everything. So I was like, okay, I have some spare cash to put into. So I did, without caring too much about it, right?
Mm-hmm.
And I didn't even care too much about the white paper, although I know it's very important to research.
Oh,
but that was like the first take. And then of course, Scrypto released 0.1, a version 0.1, the very first version. And as soon as I got into it, because I'm a developer, I just want to see the code.
Yeah.
And that's essentially where I got sold. I started comparing other smart contracts and languages across other chains, and I was like, no, I really do think Scrypto or Radix is probably the best and most closest next step when it comes to DeFi. So ever since then, I kind of went into the ecosystem, and here I am.
I love that. That's the way to do it. I feel like your story is similar to others. I'd be lying if I didn't think the same thing. I was like, man, all these layer ones are just mooning like crazy. And like, I'm like, being early to Radix definitely makes sense, And so I completely agree. My story's kind of similar, is that I started diving in and got in the ecosystem, right? And so now that you're here, you started a project called Radlock, right? What's Radlock?
So actually, instead of saying that, I created Radlock. Actually, I was approached by a team member about their project.
Okay.
And so, you know, so Radlock, first of all, is what we're hoping to be the first token liquidity locking and vesting scheduling service at its core. But the main mission really with Radlock is to kind of encourage being more informed and creating the bridge between an investor and a project creator, right? Because as a project creator, when you lock or you vest your tokens, you're essentially giving transparency to investors, and therefore you're creating a sort of bridge, right? And this is all with the sake of having the objective of safety on both sides, right? So that is Radlock in a nutshell, essentially.
Okay. So when you say safety, so what is the importance of locking a token? Like, why do like you say safety, but what does that actually mean in practicality? So if I'm an investor I invest in a project, am I investing through you, or you guys at third party like straw man? Like what's the importance of that, and how does that actually kind of work?
Yeah, so that's an interesting question. And actually, this is also, this ties into the part of, being educational around this space where you need to know what tools there are in the DeFi space. So what locking actually essentially does is, the use case here most typically is when project creators, mint their tokens, right? They actually provide tokens to exchanges, right? Either centralized or decentralized. And that providing of tokens is liquidity, right? You provide liquidity. Now, in decentralized exchanges, in exchange for providing liquidity, you usually, by some mechanic, get back something called liquidity pool tokens. Now, those tokens are there to signify that you've provided liquidity to a particular decentralized exchange. Now, the part where locking comes in is that when you lock these liquidity pool tokens, investors can then see how long it's been locked for. And therefore, the investor can make an informed decision to say, they are locked for this amount of time. I know that liquidity is not going anywhere anytime soon in this time frame.
Okay.
And that is a concept of safety.
Okay. So that's interesting. So let's break that down just a little bit, right? So when you say that it's being locked, right, and so investors know that, is that a service you're providing? So say, let's make up a coin. Say bird coin, right? There's a bird coin and they're a project and it's a meme coin and it's about birds and they take pictures and birds go everywhere, whatever, right? And so, but it's all the proceeds are going to be donated to XYZ charity, right? So if I'm a project, I come to you to help lock up my tokens as like the creators and distributing it out, and then you work with exchanges and liquidity pools. Is that how that works?
So not specifically. So in this case, so let's actually go with that example, right?
Okay.
Let's say you're a project creator who's created a token, and now you want a way in order to safely take out or cash out your tokens after a certain amount of time, right? In this case, vesting is the service you want to use, right? Because I guess you'll have multiple team members as well as multiple destinations, right? Like a charity. Now, what vesting will do is it will create schedules of releasing locked tokens after a given time, or you can do additional actions to agree to take out liquidity to a particular wallet. And in that case, that would be, for donating to charity. So that would be a perfect use case for vesting. which still involves locking your tokens, right? As for the second example of, for example, working with exchanges, for sure we will work with decentralized exchanges to figure out how their mechanisms for liquidity pool tokens work. However, we won't be enforcing to project creators that you definitely need to lock with us. It's just about how transparent project creators want to actually be. And so if they want to be transparent, they should lock their tokens in a transparent way. And in this case, it would be through Radlock, right?
Okay, cool. So that's why I was asking, because like I'm a project creator myself, right? And so I'm looking to be as transparent as I can, right? And so there are other creators out there listening to this who want to go about it the right way, right? And so you're providing I'm very aware about vesting and how liquidity works and this whole concept, which is why as soon as I heard about your project, I was like, oh my gosh, we got to get this guy on here, because I honestly think that that's one of the first steps to truly unlocking DeFi is having locked liquidity, right? Because then you have, like you said, your vesting period that you can send to your employees that'll come. Is this all through smart contracts too, by the way?
This is completely through smart contracts. And so actually I've seen now that, in other chains, they provide exactly the service, but not in a decentralized manner, especially with vesting, right? With vesting, they assume that they have already owned the tokens, right? But actually with vesting, there's always team members involved, right? And therefore, like we're still agreeing on this, but the way that I'm designing this Radlock in terms of vesting is that everyone has to agree to add a shareholder, and everyone has to agree to have the set shares that they want allocated to them, right? Everyone has to agree that they want that share, and everyone has to agree to add or remove stakeholders. I haven't seen that in other services, right? Which is really surprising because the context is completely different to locking-ish, right? Because with locking, it's just an individual, right? Like if you're just a one-man crew, locking is the best option here, right? But if it involves teams, team members, vesting is the better option here. And it's quite interesting that you said that this is one of the first steps to unlocking DeFi. The thing is, the reason why I accepted, being part of Radlock is that I truly resonated with this idea of safety, but most of all, like I feel like it's the core infrastructure required in DeFi that will truly bring maturity and more, legitimacy to this space, right? But yeah.
Absolutely. This is a little bit of a technical question, but so say you have investors that are coming in, right? And they have, say, warrants, right? They have rights to warrants to certain tokens. Is that something that Radlock in the future may consider using too, right? You can lock those tokens with those warrants in the smart contract, and once they execute it, like they can get the liquidity and then the influx of capital coming to whichever creator, whichever company's doing that. Is that something that you all might be working on as well, or?
So we're thinking like about this. I think this category of a service falls down to the launchpad side of things, right? Where investors actually want to be able to invest early before even, they've listed it on an exchange, right? An ICO, an IDO, and so on, right? So we're thinking heavily about this, and we want to be able to provide this for both investors and project creators to go through these series of funding. But for the moment, we want to completely get the vesting and locking side, correct as a first step to our service. And then we want to think purely around this concept of safety in DeFi. I think the main point here is we just want to be the bridge between both investors and project creators, but also inform a level of safety to investors, right?
Absolutely.
So yeah, that's the goal.
That's cool. I was curious because it's cool because I'm wondering how the structure will be set up, right? So is Radlock going to be some form of DAO? Is it going to be like more of a centralized organization? Or have you guys not gotten that far yet and you're trying to figure out how it's going to work? Or
It's definitely something in our mind. So governance is again quite a tricky topic, especially when we want to make, you know, our service as decentralized as possible. And you know, this comes down to tokenomics, which everyone asks for, but you know, the reason why we're so careful about releasing our tokenomics is that we want to get this right.
yeah,
It's so hard to create a sustainable economy through tokens, right?
Mhm.
We don't want to just wither away because of bad economics.
I agree.
Yeah.
I completely agree on that standpoint because it is difficult, right? And especially with regulation coming probably to crypto soon, like most companies and most projects, they don't know exactly how it's going to be regulated and what kind of rules are going to be implemented. Whereas if you have a traditional security, because all these liquidity and securities and vesting and ownership and like creators, this all exists in the traditional markets too. And so like it's not traditionally just a sorry, my boss just walked in, but it's not traditionally just stocks anymore, right? You have like these tokens that can be used and spent within an ecosystem in a broader range of area. Like say if you own stock of Apple, right? You're not going to go to the Apple store and be like, hey, can I have a Mac? Okay, yeah, here's 8 stocks, here's 8 shares of my Apple stock. You know, like that's just not how it's going to work. But if you say wanted to buy a t-shirt from a random project and they have Doge coins or whatever, like different types of things, and that's their project, and they can buy and sell with what is kind of equity, but at the same time, it's money, right? So it's hard to really get these things on paper and get these things written out and in a good way until there's kind of regulation and guidelines about how that's going to work.
Yeah, exactly. Yeah, which is why like we haven't touched upon the topic of governance just yet. You know,
Sure.
it's a tricky topic, especially with, you know, tokenomics, because that's essentially the equivalent of shares in the centralized world, right?
Yes.
Um, but at the same time, it needs to be community orientated. You know, shares shouldn't be given purely to the creators because that defeats the purpose of decentralization, right?
Exactly.
So yeah, we're really kind of first just working products first before going into the socials of our service and beyond, right?
Mhm.
Yeah, to answer that question
No, I
in a
get that
long-winded
absolutely.
way.
Cool. So, what's the biggest issue that you think right now facing your project and maybe crypto as a whole? I know we just talked about that a little bit, but can you touch on maybe that specific issue a little bit further?
Yeah, so actually, you know, for the moment, for Radlock, you know, we're going through step 0, right? And step 0 is essentially feature parity with other chains, right? We know that it's the core infrastructure that's required for Radix, and therefore that's why we're making it. But with the use of Scrypto, with the use of ledger technology, we can go beyond this, right? Like for example, it doesn't need to be completely locked to liquidity pool tokens. You can lock any token. So
Mhm.
that restriction is already not there. So with the ever evolving, you know, concept of safety, it's really hard to kind of understand what other tools will help both sides when it comes to safety, right?
Mhm.
So that's why I really think vesting and locking right now is step 0. We have yet to reach step 1 into maturity and mainstream, essentially. You know, the fact is we're not mainstream yet, and therefore we're subject to so many changes in governance, economics, so many things can change. And this is what it means to be early. This is what it means to have a booming ecosystem year on year. But with that comes a lot of challenges as a service, as a company,
Absolutely.
So yeah, foreseeing that it's going to be quite a big challenge.
Yeah, I completely agree. I think you hit the nail on the head on that. So so what do you got going on? What's your most exciting thing that you're kind of working on right now currently?
Yep. So I have quite a few things in mind with what I want to create, both centralized and decentralized. Kind of going away a bit from Radlock for mine personally.
Sure.
Yeah, so I work on this side project called Beamstream, and it's essentially a platform to kind of show programming live streams, right?
Okay.
I kind of want to be able to show other developers that, other developers are also prepared to show how the process of developing is like, um, and evolve that further. But on the decentralized space, I'm actually really heavily considering creating some sort of blueprint marketplace.
Okay.
So, in Radix, we have this royalty. Well, we will have this concept of royalty. And it's something that's been on my mind. Either someone creates it or I'll be the first one to make it. Either way, I want to contribute to a service like that because, it like the way that Scrypto has been designed is it's to encourage reusability, right? It's to encourage that these people have tested these contracts and components. Let's just reuse them. There's no loss. It's completely free. So in that sense, either I create a blueprint or like someone else does, and I'll just contribute with them.
Yeah.
Yeah, that's something that's on my mind that I want to get started as well.
Okay. So how would that work? Right? Blueprints you talking about for like stacks of code and stuff like that, or?
Yeah, so so starting off with this concept of blueprint for non-technical people is this idea of Lego blocking a whole service together, right? Like, for example, a very hard problem, well, classically anyway, is a decentralized exchange, right?
Yeah.
That decentralized exchange can be broken down into several components, right? For example, we can create like a liquidity component. We can create the logic that swaps them as one component, and so on. And the idea with a marketplace is to essentially break things down into its lowest logical form, so that it can be reusable to other services regardless of their context. And that is the idea with this whole blueprint ecosystem.
That's cool. So it's like reusable. So you can take, say, a piece of what someone else has built and then use that piece, say like a liquidity lock tool, right? And a decentralized exchange. And then you can take that liquidity lock pool and put it with a different type of service that requires like maybe collateral from micro lending, right? Something like that, right? Where you need a liquidity pool to back up the assets they're being lended against, right? So in that aspect, you can take something like that.
Yeah, I mean, and just with that example, for some reason, maybe you want to exchange tokens and straight away lock them, right? You can do that if you just have, so you have, let's assume you have a decentralized component already, right? And now you want to be able to lock them straight after you trade. So all you would theoretically do is bring in a blueprint for locking and then just feed your tokens into that component and it's locked, right?
Okay.
So yeah, Scrypto makes it really, really powerful about the possibilities we have for, completely atomic operations, as one whole thing, but also being able to bring several components just together, which you would never really think of in other chains, right?
Yeah.
You would think of them as very static implementations, very concrete implementations, whereas with blueprints, you want to make it as composable as possible.
That's cool. I think that's really cool. It's fascinating. I'm not that technical when it comes to things, but I do understand some of this stuff, and I'm starting to learn more and more. And I feel anyone who's actually currently in the DeFi space or currently in like actively in the crypto market, given that we have a bear market, like they are interested in this stuff too, right? So I think it's really important for those people to understand why Scrypto, right? Why Radix, why blockchain, why DeFi, why you're locking things, right? It's so that, and like you keep saying, it's about safety, right? And it's also about a lot of it too. Isn't this the scalability terms? Isn't that what part of Scrypto's whole sell is as well?
Yeah, I think just by design from the language, you know, the, from the composability aspects of blueprints, it gives this benefit of scalability. Because you know you want to break things down as you would as a software developer into a very separated piece of logic that you can just bring together. You can test them individually, but you know you can bring them together. And yeah, that's yeah. You also want to feel safe when you're developing. You know,
Yeah.
you don't want to have those disasters as you would read on those wrecked retweet articles and so on. It's horrible. I don't wish upon that on any investor. And you know, as a developer, you don't wish for the developer to go wrong like that either, you know, because it trust me, they feel that too. They don't want to create bugs on such an important transaction flow, right? And this is probably the first chain that I actually feel comfortable working on because
Well,
you know it gives me confidence that you know I won't just go wrong because of a stupid mistake I made, you know,
sure.
and it won't cost me like millions as a result of that consequence.
Absolutely. Like,
Yeah,
isn't that kind of what happened with Ethereum Classic or something like that? Like, didn't they have a mistake in the code or whatever, and funds got locked and they couldn't use them? Isn't that something that's why they forked to Ethereum? Is that similar?
actually, I mean, funny you say that it's classic. There was already quite modern events that happened already
Uh-huh.
where someone designs a contract
Yeah.
to have a vault of you know locked up money that they've basically earned as a result of that contract,
Uh-huh.
but then no one could take it out.
Uh, okay.
So they completely messed up the permissions and no one can take it out. It's just there locked up forever.
And that
And
was with the
it's
smart contract?
yeah, that was with the smart contracts. And
Oh,
I'm just thinking like, would this ever happen with Scrypto with this concept of vaults and buckets?
mhm.
You know, and I'm thinking it would be very hard to make that mistake.
Oh, wow.
But yeah, it's interesting. Yeah.
So that's what, so because I'm trying to find real world examples of why Scrypto works, right? So that's why I'm like picking my brain, trying to think like comparatively, because I'm learning so much from you already just listening to you talk. So it's amazing. I love this, right? And so I'm trying to figure out how to relate it to other people when I go talk to them later, right? Like about this concept. So vaults, right? So vault is essentially, say you have an API of something you're staking or whatever, and then it goes into the vault and it's locked up. And then so essentially what happened was on Ethereum, they locked it all up, but they never made a key, right? And so
Yeah, essentially it was that like they completely misconfigured the permissioning on that.
wow.
And with Scrypto, they make it very clear that with vaults, you can make vaults either completely public
Uh-huh.
or you can give them restrictions to say that only a person with this type of token
Uh-huh.
can access this vault. And
Yeah.
that's it, right?
Wow,
Uh,
that's fascinating.
and of course, you know, like the mental model when it comes to learning this is also quite interesting and simple even for non-technical people, right? So this concept of buckets and vaults is that with buckets are essentially the process of moving resources, right? And where these resources have to end up from a bucket is eventually into a vault, right? So you're going from one vault, you take something out, you take a resource out, you put it into a bucket. Now that bucket travels all the way to another vault, which the vault then accepts. And that is the flow of assets, right? It's a very simple mental model, but it's a powerful concept that actually I've seen Ethereum try to implement this concept of vaults, but Scrypto just has it.
Oh wow.
Yeah.
That's kind of crazy. So it simplifies it essentially and makes it, by simplifying, a lot of times people are like, make it simple, keep it simple, keep it moving, right? And so by simplifying things and putting on a more basic aspect, right? Like transaction, it makes it easier and less likely to mess up than a big complex web of how that would work.
Yeah, basically, I think the biggest gap right now is with like how smart contracts are designed, right? So with Ethereum, I would say that it's a very, very low level language, meaning you, instead of interacting with assets, you're interacting with the blockchain, right? That's a very low level programming, right? The thing is with Scrypto is that you're not thinking about the blockchain. You're not thinking about interacting with blocks and timestamps and block sizes and all of that, right? You're thinking about the movement of assets.
Okay.
That is, I feel, the next step when it comes to smart contracts.
Okay.
Yeah.
So, because I'm just trying to think, right? Because so when you say assets, are you talking about NFTs? Or are you just talking about tokens? Because I'm trying to figure out how like an everyday user would interact with this. So like they'd have a user interface. Could you give me an example of like how, say me, I get a scrap, right? And I want to lock it for XYZ reason, right? How would I go about by that process, and how would the interaction with the bucket and the, say, vaults work?
Yep, sure. That's a good question. So actually, yep, starting from the concept of vaults and buckets, specifically with the locking example that you have, the idea is, so actually when Babylon releases, your wallets are vaults.
Okay.
And if you didn't know already, your wallet is essentially a Scrypto component under the hood, right? And all it does is that you own a vault, right? And so let's say you want to actually lock your liquidity pool tokens, right? What would happen is that you would withdraw tokens from your wallet's vault, and then that will be placed in a bucket, right? And that bucket will travel all the way to the locking smart contracts that Radlock would provide, for example. And now the contract for Radlock takes that bucket in. It checks if you are registered with a badge already. If not, it will fail it. Otherwise, it will continue and let you lock. And then it will lock it into its own vault that no one else can access, not even the smart contract creators. So that is like the idea with that flow.
Okay. So, and you said if it has a badge, what's a badge?
Yes. So actually, before that, I should have gone in order, right? So this concept of assets we're talking about are resources, and resources are non-fungible tokens or fungible tokens.
Okay.
Right. And now with this concept of a badge, it's no different than any other resource that we know already, right? It's just that it's explicit in how we want to use it.
Okay.
So what I mean by that is you can either have a badge as a token, which means you don't need to differentiate between a user. You only need to present that, hey, I've got this badge. I know I can do something with it.
Yeah.
Tell me what I can do with this, right? So that is a perfect use case for a token badge, right? And another example is, for example, you want to have an admin in your smart contract, right? A super admin, if you will. You don't need to differentiate between them. You just need to see if they have the super admin badge or super admin token. Now, what's interesting is that a badge can also be a non-fungible token. Now, with non-fungible token is an interesting part where you do need to differentiate between your users, right? So, for example, a lending protocol, right? Depending on your user, they have different interest rates, for example. So user A is able to claim up to 3% interest on something, whereas user B can only claim like 1% interest on something. So in that case, a good use case is to have an NFT as a badge. And this is the concept of badges.
Wow, that's fascinating. Like, that's absolutely crazy. So like, they would just read it by being in your vault, or does it have to be attached? So if you have a certain NFT, right, and say the 3.5% API NFT for micro lending company XYZ, right? And you're interacting with, say, Radlock, that is contracted, like the lending company is contracted with Radlock with smart contracts or something, right? And that's how you could access that, is by just having that specific NFT token to it. Because most people think of NFTs as these pictures, right? They don't think of them as like images. Like they don't think of them as like tools for utility outside of just JPEGs. You know what I mean?
Yeah, I think it's quite a big misconception, and it's going to take a while to sort of mature this terminology, right? Because an NFT is a very powerful concept. It's just that it's now been linked with non-fungible images rather than non-fungible resources. And that is quite a big gap to, clear up, essentially. But yeah, like with non-fungible tokens, it's now it opens up paradigms to completely new things, right? Especially when using Scrypto, right? And especially with a new concept that even Vitalik has, brought up, this concept of a soul-bound token. It is basically your token that you can never transfer out of your vault. We already have that. Like in Scrypto, we already have this concept, right?
Oh wow.
Yeah, like we don't have to redesign it on another, from scratch. We already have this concept. And in terms of authorization and how this works, is that usually to keep things as decentralized as possible, with your example of microlending and Radlock, the idea is microlending would have your own user badge. So user A will have a user A microlending badge. But with Radlock, you also will have a Radlock badge. So it keeps things safe in that you can't just use the same badges in order to interact with services, right? Whereas and the thing is, this concept of authorization doesn't exist in most other chains, right? And it's such an important topic to touch on because, in the centralized world, we have so many protocols for authentication, right? We have OAuth 2, which is, it's the process of like logging in with Google, for example, right? You've seen that, I'm sure. So that protocol is called OAuth 2. Right, we have JSON Web Token authentication in the centralized world, where they're stateless, it can expire at any time, and you have to refresh the tokens. See, the thing is, none of this process exists in any other chain, right? And Scrypto really just hits the mark on this, where it makes it safe that you can be assured that you can't just use any badge for any service to get on anyone's account, right?
So a badge is essentially an NFT, yes?
A badge can be an NFT or a token. So
what is the difference between a fungible token and a non-fungible token, right? Like, what is the actual like lay person's difference?
Yep. So I guess, yeah, it's actually quite blurred now, isn't it?
Yeah.
So starting with the concept of a fungible token. A fungible token these days are used currently as currency,
Okay.
right? It's an alternative form of currency. Whereas with non-fungible tokens, it's used as a unique collection of 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 an asset.
Okay.
So
So I
the
get that.
yeah, the simplest context is obviously, you have like, for example, Pokemon cards,
Hmm.
all of them are part of a collection, but technically they're all unique, right?
Yes, exactly.
Um, so yeah, that is the best definition as I can think of.
No, I completely get it. It makes perfect sense, right? So like for example, with how people are going about Radix, issuing NFTs right now, right? They're just issuing these placeholder fungible tokens, right? So scrap tokens, they are a fungible token, but eventually, once the images and the JSON files are uploaded to the actual, once smart contracts are live, they're going to create a non-fungible one that has this unique identifier, right? So like strap number 01234 has these specific identifiers, whereas just right now, scrap tokens are fungible, but eventually, since they're being non-fungible, they have a unique identifier attached to them. Is that correct?
Yeah, so I've seen quite a few projects actually, when it comes to NFTs, and you are correct. Currently, this concept of non-fungible doesn't currently exist in Radix,
Mm-hmm.
and so in exchange of that, you have fungible tokens instead, right?
Mm-hmm.
So they're managing uniqueness through a few methods. Some people create their own storage solution,
Yeah.
so they create a mapping to say that this address owns these IDs,
Yeah.
right?
Exactly.
Or or they completely or they store all of the transaction messages, which holds which uh collection that wallet would own.
Mm-hmm.
So currently it's kind of pseudo NFTs at the moment. It's not really,
It's a
and,
hybrid
and it's
Web2 solution.
yeah, essentially. But I'm actually quite surprised at the NFT space within Radix because it needs an element of trust to
Mm-hmm.
say that when Babylon actually comes out,
Yeah.
I want to be able to exchange this fungible resource for
Mm-hmm.
my non-fungible resource.
Yes.
And it's interesting because it's booming, the ecosystem, even though
Yeah.
it's not there. But at the same time, I'm just like, you guys need to be sure about this project owner,
Uh-huh.
that they won't commit anything malicious when Babylon does come out, or
Exactly.
they might, do the classic slow rug where they
Yeah.
won't even implement the smart contract to do that exchange.
Uh-huh.
Um, and it's interesting because I saw this problem and I was like, people will need a way to trade their fungible tokens for a non-fungible token, right? And I actually built quite early on a simple blueprint that does that,
Wow.
right? Like given a non-fungible token, given a fungible token,
Uh-huh.
return the non-fungible token equivalent,
Wow.
right? So,
You've already built this on Scrypto?
yeah, it's a very rough mock-up, but it works.
Wow.
And yes, but this is what I mean. This so even if the project owners don't know how to do
Uh-huh.
this design, like chances are there will be someone in the community, such as myself, who's
Mhm.
identified this missing gap
Yeah,
of this migration. We will need a migration from
absolutely.
Olympia to Babylon,
Mhm.
and we need a smart contract for that. But so that people don't slow rug due to lack of technical knowledge,
Yes,
hopefully someone will be there to create a blueprint. If
absolutely.
not, I'll probably build it. But
I mean, honest
that's
to God, that sounds like one of the best benefits I could ever hear of to get some more security would be in turn because you're talking about security and safety, right? That is one thing because there's a lot of people out there who know how to just make a token and then, or just pay someone to make a token, and then they can make these images and make these Web2 solutions and then sell them, right? But then that's where their knowledge and know-how stops. So if you actually do something and make a service, right, for a blueprint that you could even just put up a website, have your like a minting service, right, where you can exchange these tokens and then you can access, maybe get an API or something that can access the project's database and then upload it and then get these NFT tokens and make sure that whatever wallet it's coming from, the fungible tokens that are being sent correspond with the backend database, right? So it's like that's interesting. That's definitely something that people are going to need, you know, because that's a solution that my NFT project we're looking at right now, right? Is like, how exactly are we going to be doing this? And I know that there's other projects out there that might not know, you know, and so that's pretty fascinating. It's really cool.
Yeah, I guess so. So I mean, this essentially brings on the point of, you know, Scrypto going to the next level. We're just thinking about assets rather than the blockchain, right? We know the kind of products that there are in the DeFi space. We know them now. We know what kind of products to make in DeFi. Let's actually make that easier for us, right?
Yeah.
And yeah, that's why, you know, that's why I'm not too worried. Even in the NFT images space, you know, there will be someone to build that. They will see this gap, and they can either serve it as a service, as you said, or as a blueprint. You know, it now a developer actually has options, right?
Yeah, or they can do both. You know what I mean?
Yeah, exactly. They can do both. You know, even with Radlock, we're flirting with the idea that either they could use our service or they could just use our blueprint, you know, and that is even more decentralized than you know, than other services would be. You know, we would expose our service as two ways, you know, a user interface or a technical person that can just add the locking mechanism on their side, you know.
Yeah, that's crazy. It's cool. It's really, that's what makes me so excited about decentralization. It's just the autonomous nature of what's going on. All of these like algorithms that are being put in place and all of these codes and stack and blueprints and vaults that's coming about. It's stuff that has existed in real life, right? Like an actual vault. Like to get gold out of the ground, you had to dig it, right? Put it in a bucket where they send it to a smelter, and then they smelt that, and then they put it into a vault to storage, right? And then you have to have a key to go access that, aka a badge, right? Could have specific badges, right? Like you know, generic ones, or you can have like a higher level security where an NFT, which is specific to you, to access the back end vault, that you have different levels of security that you can access. So it's like it's not new concepts. It's just it's new technology that's being implemented on the internet. And so that's what has drawn me so much to it, is because before Web 2 of information, like I always tell people that, in my opinion, blockchain is truly the first steps to like artificial intelligence and machine learning, really getting that moving, because it gives the internet a memory and it makes it tangible. Whereas before it was all of these like ad hoc solutions crumbled into one, and you have to have a lot of trust, like banks and stuff, and getting their security and getting all these things. And so it's absolutely fascinating.
Yeah, indeed. I think in the long term, definitely you know, like you said, with the mental models of buckets and vaults, you know, even as a software developer, it's really important to basically teach developers very simple mental models, right? And taking the mental model and then actually actualizing it in code is, you know, in a simple way, is such a hard problem. But I feel like in this case with Scrypto, they've really nailed that concept, those mental models that are easy to grasp, right? So yeah, it's definitely going to be an interesting step in DeFi, and as we are all hoping for with Radix anyways, this is, I feel, the next step.
Yeah.
Yeah.
I honestly, after talking with you, it makes a lot more sense. You know what I mean? Because like I said, I'm not a developer, I'm not a coder, but I do understand concepts and I do understand structures, like creating like tranches for private equity fund for liquidation events, right? Like creating a tranche about how those people get different funds depending on what shares they have, aka like a preferred stock, right? Could be a form of a fungible token, but at the same time, it could be, you can have like NFTs to it too, if it's just one, right? If you're with one specific shareholder, and then you can have those assets that are locked up, right? And once it's liquidated, they can have the thing. Wow, it's fascinating.
Yeah. And it's interesting because even the locks, well, this is going under the hood now.
Yeah.
I'm going to expose my implementation at this point, but like,
Oh, you don't have to if you don't want to.
no, it's all right, because
Okay.
I just want to really drill down this concept of assets, right?
Okay.
Even the locks themselves within Radlock are resources,
Yes.
right? They're to represent the lock. And
Okay.
internally, within Radlock, they are actually being stored as a fungible resource.
Okay.
Rather a non-fungible resource, because it needs a bunch of data about, when is it going to be released, and so on and so on.
Okay.
But yeah, like, yeah, this is a way of protecting data that you'd like to store. And from this concept, it also evolves into, governance models. Like, I think before we were talking about, documents of suing and stuff like that.
Yeah.
We need a way of making them transparent, right? And but also we need a way of protecting them, and that's why we have this concept of vaults, right?
Absolutely.
So yeah, that's that is it.
That's it in a nutshell, right?
Yep.
I love it. Honestly, I think that's so incredible. I mean, like I said, I think that what you're doing is incredibly important. As soon as I heard it, because you popped up on the catch up on Sunday, right? And
Yep.
when you started telling me what you did, because Kilo Voltage, he was like, "Yo, bring up Beem. He's a big Scrypto guy." I was like, "All right." And so I brought you up, and you started talking. I was like, "Yes, this is it." You know what I mean? Because I've seen all these other projects on uh like Radix that they're trying to do all these different things. They want to make decks, they want to make incubators, they want to do this, but like they're preaching DeFi, right? And they want DeFi, and you can't have DeFi without locked liquidity. You just can't do it. And so like you're creating these tools to have it be done, right? Like they always, like, because I'm a big finance guy and I'm obsessed with how all of this works. And so, which is what drove me to Radix in the first place. They're like, oh, DeFi, they're trying to actually fix this stuff. And I was like, okay, sounds fascinating. And so, it's really cool because like say Solana or ADA or Cardano or Avalanche, they always talk about the locked value that they have on the chain, right? And so that's a very important thing, right? Because you have Luna, right? And then the stable coin Terra, which completely collapsed because of this lack of liquidity, right? And so if you can comment on that just briefly, the importance of having locked value. I know that you want security and safety, right? Like that's all important, but also having liquidity, locked liquidity is incredibly important too. And if you can talk on that a little bit, that'd be great.
Yep. So I mean, you definitely touched on a lot of topics, really. I mean, first of all, of course, we need to reach some form of parity with DeFi products on Radix, right? Well, that's definitely essential. But even before that, there needs to be a certain level of foundations, right? There needs to be core foundations that have been built, core infrastructure that has been built first, and then you can be sure when you use these services, these products in DeFi, you can be sure that there are tools to enable safety, security. And secondly, with the concept of liquidity locking itself, it's so important to be transparent about how much you have locked, by essentially trusting, a third party service that they have definitely locked it, they haven't done anything to it. And if you're unsure of that, you can look at the ledger, right? But this is so important because the service will tell you how much percent has been locked, and that will essentially be your gauge to say how much can they actually work with, and are they in it for the long term, and are they able to work on this for so much time, right? Like if tokens have been locked for like a month, you're going to be a bit hesitant because that's not enough time. Like, you can just run away the next month.
Yeah.
You can just rug the next month, right?
Yeah.
And this part is such an important part. And I know that there are post post actions that you can do, for example, taking an insurance. But actually, as much as possible, we want to prevent rather than recover, right? And this is the space that we want to kind of definitely hit the nail on, and do things right, just the way that Radix is trying to do things right the first time, right? This concept of locking is very important, especially for investors. And if investors don't know this concept about locking, they should definitely do some research on it. It is what informs you about your investment. It's what gives you security about very, very early projects, because I know how high risk appetites are in the crypto space. So, there needs to be an element of manageable risk, so that's why it's important.
Absolutely. And so I'm curious, just I guess as a follow-up question, when you're going to say you have a project, right, that's a creator and comes to you and they say, hey, I want to issue tokens and airdrop them to my community, and I want to hold on to a certain amount, and you have them say locked up, right? Like, how would your interaction be from, like, say, step, I want to create a token and airdrop them, to say however long it takes to have the community where it becomes important for investors? Like, are you going to be locking XRD? Are you going to be locking just the tokens of say governance tokens themselves if they get issued? Like, how is that going to work in terms of a like actual interaction with your users, right?
Yeah, so that's an interesting question. I think this touches upon the launchpad side of our service that we want to have. So I can't comment too much on that.
Sure.
What I will say is that there are definitely a lot of moving parts when it comes to facilitating investing, as well as protection for the project creators as well, right? I think quite a lot of other projects are also going through this notion of bidding. So you bid tokens. But yeah, we haven't really decided which options we want to give on our launchpad yet. Yeah, it is definitely something that we're thinking about a lot. But I think the core for now is definitely just locking investing.
Okay, cool. So but I guess what I'm getting to is, who would be using your service? Would it be the company themselves, or would it be
So for now, the actors involved with interacting with the service is purely the project creators. Right? And the idea for the investors side is that, given a wallet address or given a token, when you look at the token on Radlock, it will provide you all sorts of information with how much total value has been locked, or if that liquidity has been vested, right? It will tell you all of this information. It will tell you as much information that you would need for as an investor to actually invest in that new project, right? And that's why it's also important for investors, right? Because right now we are kind of going in blind, with new tokens that have been created on the Radix ecosystem, obviously due to the lack of smart contracts. But this is something that we need, and investors will also need to be informed about new projects, to just to see how transparent project creators actually are. Basically put your money where your mouth is by locking
Exactly.
it.
Exactly. No, I get it. I get it. So you can't just liquidate your entire position, right? And then just leave, right?
Yeah.
Because it's
Or rather, like, investors will know, like, when it's being unlocked. And then by that point, they can choose what to do with their investment from that point. But this is what we want to facilitate, right? We want to give them the safety that, you're not just going to go to zero, right?
yeah, exactly.
It's locked. You can then decide when it unlocks what to do then.
That makes sense. No, I love it. I think it's incredibly important. It's incredibly important what you guys are doing, and I think it's an amazing project. You guys have like some amazing goals, and I think it's super sweet. So we are at about like an hour and 10 going in. This has been wonderful. One thing I want to do, and I usually have my guests say something. If you can leave one message to people out there that are potentially listening, what would it be and why? It could be about anything. It could be you, it could be about Radlock, it could be about DeFi, crypto, whatever you want. Just your message that you can relate to people.
I would say, that's a, yeah, now I'm just thinking about it right now with
Absolutely.
something better. So I think what I would say within the crypto space currently, I feel like we're going through a period of explosive growth. We're going through a period of extreme change. So I would say to investors and project creators to ground yourselves, but don't be hesitant to continue building what you want to. I still think it's going to be the next stage, whether it's 30, 40 years. But at this point, we are going through a stage of extreme change and extreme growth. And with that comes a lot of changes. However, it comes with risk as well. But I would say, the markets tend to respond to things that have a use case. And in this case, we have very strong use cases as to why we need to make crypto the mainstream.
Yeah.
Heck yeah. That is my message.
I like it. No, that's perfect. That's the way to do it. Because like there's a lot of stuff going on, and that's a good message to relay. Because I agree. I think that was really important to say. So thank you for being here, Beem. This was incredible. I'm probably gonna be hitting you up with questions all the time now. So you're probably stuck with me on that. But other than that, it's been wonderful. I hope you have a great day, and everyone else. Hope you all have a great day and a great weekend, and catch us next time on Towards the Storm.